Hey guys, it's Matt from Optimus Futures. Today I'm going to talk about psychology of trading as I promised in the previous video that I did, which you'll have a link here too that you can watch as well. I wanted to address very specific things in psychology. Now, I'm not a psychologist, okay? I don't have a degree in psychology, but the process of learning, the process of psychology takes such a big part in trading that this is something that I've always read about. And I feel that today in the age of information, there's so many blogs, forums, and there's also people who do talk about psychology of trading, who do have degrees and PhDs, but many of them do not trade. Very rare that I find somebody who actually understands trading, psychology of trading, with some sort of an academic degree who can really explain how it is. They exist, it's hard to find. So what I did over the years is that I've read about the process of psychology first as it appears in general, and then, what I'm going to do today is talk about the process, how it relates to trading. So I'm going to talk about something very, very specific. And what I'm going to talk about is the 4 stages that people that are learning are going through. So I'm going to use terms here such as competence and incompetence, right? This is not to say that somebody who has incompetence in a certain area is not intelligent. It's just those are purely psychological terms that we use in order to describe somebody as he goes from the process of incompetence to competence, from being an amateur to a professional. Okay, so the first step that exists in when traders come to the market, or somebody wants to be a trader, is unconscious incompetence. What is unconscious incompetence? This is a stage that people don't even know what to ask, right? They don't even know, as they say, the unknown. Specifically in trading, when there's unconscious incompetence, this is the process where traders hate losing. Now you're going to say, well, doesn't everybody hate losing? Yes, everybody hates losing, but professionals who lose do not let one single trade or a series of trades, to destroy them psychologically or change their plans or stop them from going forward and continuing to trade. So they recognize things such as mathematical variance. They understand that they don't have illusions that every trade could be a winner, or they think that they could have a fixed amount that they can make per day. And this is also part of, unconscious incompetence. This is where people hate losing, having a fixed amount that they want to make per day, and they think it's actually achievable, that they say, I want to have 200 per day, I want to have 500 per day. And there's nothing wrong with working with goals, but essentially, in the marketplace, those long-term goals have to be achieved over time as an average, not every day. So again, this is a step that a lot of traders get into. There's no appreciation, again, of things such as risk management, position sizing, or anything of that sort. And again, this incompetence comes from because of lack of experience. So simply, it's not there. So you don't know what to ask. You don't appreciate the small little details. Every loss is a disaster. You get the picture. The second stage that traders go to, it's called conscious incompetence. So basically, now they actually recognize their deficit. They know what's wrong, but they're not at a point where they can implement it right. So this is a process, for example, they understand risk management, they understand position sizing, they're starting to understand the level of psychology that involved in trading, and they understand the impact that psychology has on trading. So let's talk for a minute about conscious incompetence and unconscious incompetence, just to separate the two psychologically. I think that people do not trade only for money. If that was the case, they would not they would not get affected so much if they have a streak of losing trades. I think what happens over time is that the market structure works in such a way that it lets you believe sometimes that good times can last forever. And then you have the idea of, I can take my risk from 1 trade to 10 trades to 50 trades, and this is where, they get it starting to affect them psychologically. And this is again in the process of unconscious incompetence. When they go to the conscious competence, they understand this is not the way to think about this. You cannot get destroyed over losses psychologically. You cannot get euphoric over trading. And now you're starting to recognize the fact that you have to go through some process, that success will not come random. And just because you paper traded, right? For some people paper traded for a week, a month, or 2 months. I mean, my theory is that you can paper trade for 10 years. If you don't have skin in the game, it doesn't affect you psychologically. You cannot go from incompetence to competence in a paper trading mode. You're not going to skip all those 4 stages that I'm going to talk today, going from one to another, just because you're paper trader. It will never happen. Paper traders will argue with me about this until they're blue in the face. I still stand still and firm that having skin in the game, recognizing, adjusting things when you trade with live money has a lot more impact on you psychologically, and you make better decisions, I think, because you understand that there's a risk involved. The third stage is conscious competence. So now you're at a stage that you're actually starting to take steps, but they're very conscious in order to succeed. For example, at this point, everything comes with an effort. You recognized your deficits, you recognized your weaknesses. Now you're saying, you know what, I'm going to go and I'm going to start using it in a way that requires some sort of a process. For example, at this point, people will start journaling. They will start journaling their trades. They're winning trades, they're losing trades. They will make analysis of every single step that they have. They're not just going to shut their computer down at the end of the day and say, okay, tomorrow is a new day. Actually, they're going to go over it. They're going to replay it. They're going to replay the process that they went through. They're going to put on paper the thought process. If they had a winning trade, a losing trade, they will use things like EdgeWonk, for example. EdgeWonk is a great tool out there. We're going to give you a link for it down here. To actually journal your trade, so you can come back and look objectively. This is what I've done. This is what I've done. And this is the concept of conscious competence. It's an actual involvement in the process of everything that you're doing. So as opposed to the first step, which is unconscious incompetence, right? That you just get pissed off at the end of the day. You just full of hate. You hate losing. You don't understand the process. You have some sort of I don't want to call it illusions, but I would have to say misconceptions. And by the way, just to let you know, I never put down people who have difficulty in trading. As a broker, I never do, not as a person. Because the first time I saw futures and commodity quotes, I wanted to put a pencil in my eye, right? So that was a long time ago, but I still remember the process that I had to go through to understand the market structure, trading, and let alone, being a licensed broker. The fourth stage, it's actually conscious competence. At this point, a lot of the things that you do are implementing complete exercise of risk management, sizing. You don't judge every trade by its success. It's not about the money anymore, it's about the process, and it's becoming unconscious. Think about it this way. There's a lot of things that you do when you drive, right? So when you first started driving, you're very conscious of things, right? Everything that's around you, right? Where the cars are coming from, almost to the point of paranoia to some when they start trading. I'm going through this right now. My kid is a teenager. I have to sit beside her, so I'm going through this one more time. But the people who are at the fourth stage of trading, which is unconscious competence, this is what we call second nature. Trading has become a second nature to them. So again, 4 steps. There's unconscious incompetence, there's conscious incompetence, conscious competence, and then unconscious competence. And you want to go to the fourth stage. There are people that the learning process might take 6 months, some 5 years, some 10 years. It is what it is. But knowing that there is an actual process that you go through will help you out a lot. Now you can actually analyze and say, what stage am I at? Do I know everything there is to know? Do I take all the process that is required? So for example, I always tell people that trading has such deep psychological impact. Again, not only because of the money, because people who are losing, they think they're going to lose all the time. People who are winning think they all of a sudden they think that they want to quit their job, and and the next thing they have a bad thing that's going. They're going through a drawdown, and they might say, well, my luck has run out. Now I'm not a good trader anymore. Or they might make a lot of wins, and the next day there's losses, and they can't analyze it from a process standpoint. Rather, they let it impact them directly, psychologically, and they get down on themselves. My goal for every trader, and this is what I wish really for every trader out there, is that he gets to a level of competence that he feels comfortable trading. If your destiny is to trade 100 lots of the mini S&P, let it be. If your psychology get messed up after 3 lots, stay on 3 lots. It is what it is. As long as you get to a process that you can have positive expectancy. Now, I have to tell you, futures trading is extremely risky. It's not for everyone, but I truly believe that those who will go through the process, at least giving themselves and their capital a fair chance of actually trading right? That's what I think. Now, remember one thing: this is not a business of luck. When you come to the market, even if you get stopped out, even if you had a bad day, you could have done things right. And this is the only business in the world, probably, I think so, yeah, that you can do things right and still be on the right and be on the right path to become a good trader, and nevertheless have losing days and losing months and even losing years. And you still do things right. It is what it is. So this is the process of learning. I hope that I helped you. If you have any comments or anything about this process, please, I'd love your comments underneath. Press the like button. It helps. This information gets to other traders. You guys know how the algos at Google work. And if you need a futures trading account or a forex trading account, we'd love to help you. It's Matt Z. I wish you a really good weekend. All the best, and talk to you soon. Okay? And that's it. Bye.